Welcome to Smith Weekly Discussions, an occasional program for our readers and listeners of Smith Weekly Research. Please note this program is a private discussion and everything contained herein is for entertainment and educational purposes only. With that, we hope you're in a comfortable position, along with your favorite beverage, to enjoy the discussion. Before we get into our discussion, we want to say thanks for questions coming from our audience at Smith Weekly, including Peter S., Mike P., and Paul M. We have on Jon Bey, President, CEO, and Chairman of Standard Uranium, a new uranium-focused company yet to be listed that has the Davidson River project in Canada's Athabasca Basin. Jon, thank you for coming on.
Hey, thanks for having me on. Great to be on, Andrew.
So, Jon, why don't you give us your background briefly, kind of tell us what you've been up to as far as your background in the sector and outside of the sector, and then why you came to look at uranium as part of the natural resource markets.
Sure, I'd be happy to. So I got into this space probably about 12, 13 years ago. I came from a teaching background. I came out of university as a high school teacher, left that, and I got recruited to be a business development corp dev guy for a group of mining companies back in around 2006 or so. Mining was booming, as most people know, and living in Vancouver, every other job was in the mining space. So I got recruited to this group called the Hamilton Resource Group, and they had sort of a Hunter Dickinson type of model where they had about 12 companies under management, and I was brought in to sort of help corp dev and investor relations and sort of learn the space. And under that group, we had gold companies, silver companies, copper, diamonds, oil and gas, and uranium. One of the companies was actually Forum Uranium, which was led at the time by Rick Mazer, who still actually runs that company. So I started that. I was with that group for about 3 years. I really got to know different sectors. Uranium went through quite a run at that time. When the market started to go through terrible periods of around 2008 to 2010, that group of companies sort of disbanded, and I went on and started my first company on my own, which was called Steel Rose Communications. I basically took one of those, the oil and gas company, which was still doing quite well, and used that as a leverage to start my own investor relations firm, which I still have running right now as well. Over the years, from that period up until today, I've worked in tech, I've worked in oil and gas, I've worked in junior resource space, I've worked in cannabis space, and about 2 years ago, I was approached by an individual that I've known for probably 15 years, and he said, look, I want you to think about uranium and where uranium's headed. So I hadn't touched uranium since the early days, and I'd known it had been in a sort of a really bear market for the last 8 to 10 years. So I started doing my diligence on it, and the concept was to create a new uranium company focused on the Athabasca Basin to capitalize on where we think the uranium market's going. So after my diligence, I got really excited and decided to jump on board and spearhead this new company, Standard Uranium.
What is your take on where we are in the uranium market today, and what do you see as really the key parts moving this ball forward?
Good question. When we looked at the diligence, about a year and a half ago, 2 years ago, we really thought the opportunity for uranium to take off again over a longer period was quite high. We liked, the supply-demand spread. We could see the demand coming in the future, especially with countries like India and China with the reactors they're building, and the amount of supply that was really starting to get smaller and smaller. So we liked that. The number of catalysts that were coming up, we noticed there were a number of unique uranium funds that were starting up, and when you see those coming, they're smart and they're getting in for a specific reason. I started following, Mike Alkin when he first came out and did that one, interview at the Vancouver Resource Show. I watched that multiple times and reached out to Mike right after seeing that. So one of the things that we really did look towards was, when Section 232 was put in place, almost a year and a half ago now, and we really started to notice that utilities were not buying, and that really had a significant impact on where we see things today. So with that coming offline in the next 30 days, the people we've been talking to and watching, we're really hopeful that that's going to be the next catalyst to start to get the spot price moving and start to see those utilities starting to sign long-term contracts and see the spot price move again.
So let's move on to Standard Uranium. If you can you lay out the strategy with Standard Uranium? What do you see as an ideal strategy with this new vehicle that is yet to be listed, and how do you plan to exit?
So we started Standard Uranium with a few things in mind. Number one, The Athabasca Basin, we thought, is the probably the greatest place in the world to find high-grade uranium deposits. And in that area, the southwest corner, where we have the Triple R discovery and the Arrow discovery, that region we believe is quite prospective for high-grade uranium yet to be found. So we have a project that was it came to us from a fellow by the name of Jody DeRouge. We put that project into Standard Uranium, and we knew if we could build a good team around that project and time the market right, this would be a great opportunity for investors to do quite well and exit as the uranium market really starts to take off again. So our strategy was to take this private company and do a direct listing on the TSX Venture, which we're aiming to complete this summer, probably mid-August. And then we'll have a vehicle with a highly prospective project in the Athabasca southwest corner.
What is your thoughts? There's quite a large group of companies that are focused in that Athabasca Basin area. With the big group there, I think investors sometimes look at this big group of companies, and probably new people to the sector look at this big group and get overwhelmed. Why should they look heavily at Standard Uranium as one of the ways to get exposure to Athabasca Basin Canada uranium?
Great. So we, there's a lot of companies in our general area of the southwest corner. You look at, Cameco's there, Orano's there, Denison, Fission, NextGen, Sky Harbor, PurePoint. They're all around that area. But the two companies that have made big discoveries, of course, are Fission and NextGen with their Triple R and Arrow discoveries. Both those discoveries lie on the Patterson Lake corridor. So for us, we don't consider ourselves just an area play. We consider ourselves a highly prospective target, and I'll tell you why. We have, our geologist is a fellow by the name of Neil McCallum, our VP of Exploration, and beside him are one of our board members is Garrett Ainsworth. Well, they've both been in the basin for 10 plus years, and Garrett specifically was the VP of Exploration at Alpha, which actually found the boulders, which led to the Triple R discovery. When Fission took over Alpha, Garrett moved over to NextGen, and he won the Bill Dennis Award for actually being the lead of the technical team that was responsible for that Arrow discovery. So Garrett has seen two discoveries in this same region. Now that doesn't mean that's just because we're beside them, that's great, but we have a theory which is called the Clearwater domain theory, and that means the discoveries that were made on the east of the Clearwater domain, which is the intrusion that came up and actually brought the fluids and dropped the uranium into those regions. We believe there's going to be discoveries made on the west side of that, and that's where we are. But not just that, we did our VTEM work to identify the conductors which we believe would go through our property. We completed that last year, and we have 26 conductors that run through our project. But even more exciting, the PLS conductor, which hosts the Triple R and the Arrow, we believe that continues. It runs right through our project. And that is what we're going to be drilling next year. So that's why investors should be pretty excited to see what we have with that conductor.
Okay, let's talk about the Standard Uranium listing. When is that happening, and what is the structure of the listing as far as the shell that's being reversed, or how is that? What's the process that you're planning on going through when you plan for that venture exchange listing?
Perfect. Yeah, so you did mention it there. We are listing on the Toronto Stock Exchange on the venture side, and it's going to be a direct listing. So we had plans in 2018 to look at doing a reverse takeover, but we've decided to do a direct listing instead. We've gone down that path with the TSX Venture, been working with them since January, as well as the BC Securities Commission. And right now, all our paperwork is lining up to have us listed somewhere in August. We can't control the timing on their end, but we're going to have all our materials ready for them. And that includes having a 43-101 on the Davidson River project completed, and that can be found on our website, as well as we will have our audited financials all set, and we'll have a non-offering prospectus, which will be on there as well.
And when the listing is all wrapped up, what is the anticipated structure of the public company expected to be, and who are the substantial shareholders, and how much will management own when it does go public?
Sure. Currently, we have 38.9 million shares out. Of that, management and seed investors, we own about 74% of that. We have some institutional investors in our group, and they have not asked that we name who they are because they have the reasons for that. When we do list, we're currently completing a capital raise right now. The goal was to raise 750,000 Canadian to sort of complete our listing and our summer exploration program. And I'm happy to say we are oversubscribed already. We probably already have over $1 million in, and we're going to close that off in the next few weeks. The goal is to complete our summer exploration program and then move towards our go public in August. And then we're going to be doing the exploration works, which will allow us to be fully permitted and have all our drill targets ready for the fall with the full drill program planned for the winter. We will have roughly between 45 and 50 million shares up once we go public. Of that, management, institutions, and we will have probably just about the minimum number of shareholders required to meet the TSX, which will be just over 200 shareholders. So it's going to be a very tightly held float. Of that, there'll be about half of that, 50% of that, will be free trading on public listing, and the original seed shareholders, they're going to be escrowed for about 2.5 to 3 years.
So what is your, John, if you can share with us, what is your cost basis for the shares, and how does management plan to align with shareholders after the listing?
The original seed investment round was done at 5 cents. So of that, we raised 500,000. We also acquired the Davidson River project from Jody DeRouge. That was acquired for 23 million shares. So the original seed round was 10 million shares. And then we did a capital raise last fall, and we raised $860,000 at 15 cents. And the capital raise we're doing right now is also being done at 15 cents. Both the capital raise last fall and this one is going to have 25-cent warrants, which will be expiring in 4 years. So it's quite nice terms for those investors coming in now.
Okay, and what was the time frame as far as some of these shares being locked up?
The time frame is we're waiting to hear back from the TSX Venture. It'll either be the original, that 23 million shares that were acquired from DeRouge, those ones, and those will be locked up for either 2 or 3 years, depending on the amount of capital that we raise on this listing.
Well, let's talk management now. Why don't you give us an overview of the management team and some of the key people there?
So we have currently 3 people on management, and that is myself as the CEO, president, and chairman. We have Neil McCallum, who is our VP of exploration, and we have Martin Bajet, who is our CFO. Outside of those 3 individuals, we have our board. Neil and myself are board members, and we have Garrett Ainsworth, who I mentioned previously, and we have Blair Jordan, who comes to us. He has been in his past life, a lawyer, corporate securities lawyer, as well as an investment banker, 10 years with Credit Suisse, and recently with Echelon, and he has multiple years of capital markets experience.
And he was with Ascent Industries, if I recall, or is the interim over there, or was. What's the involvement with that company?
Sure. So let me tell you a bit about Blair. Blair was, when I first met him, he was an investment banker at Echelon. So he and I started working together there about 3 years ago, where he actually asked me to join him to take a tech company public, which was a Japanese video game company. I worked with Blair on that for about a year. And then he decided to leave Echelon and join Ascent. At the time, it would have been around January of 2018. Ascent was an up-and-coming young junior cannabis company based in British Columbia. They had hired Blair to come on as capital markets expertise and help them go public. Blair asked myself to give him a hand with that and help them with their go public strategy, which I did. Since that time, Blair transitioned into the CFO role for a brief period, and then he stepped in as the interim CEO, which he has just walked away from as of last month.
Well, let's talk about Davidson River. You kind of mentioned it there. What's the plans for the rest of the year, and then also in 2020? And also, what do you expect will be the expenditures on the project for the rest of this year and 2020? What do you see there?
Sure, great question. So in Saskatchewan, once you acquire a project, you've got basically 2 years if you stake it to not have to do any spend on it. But since this was a project stake previously, as soon as we acquired that, we have a spend we have to do every year of between $400,000 and $500,000 just to keep those claims in good standing. We've been continuing to do geophysical work. We started with a VTEM work last year, and we just completed ZTEM work, which we'll start to get the results in the next few weeks. On top of that, we're going to be doing summer exploration work. We're going to send 4 geos to site to really walk the project, look for boulders, and also look at the sites we have identified as our drill targets to make sure we can get drill rigs in there that aren't on the side of a hill, so forth. That will all be completed by in the middle of August, and we'll get the analysis back, and we intend to have those targets, 4 or 5 drill targets, really identified to get those rigs set up, and we plan to have those fully permitted and drill ready with the hopes of starting a drill campaign in February, March of 2020. Now that campaign will be pushed forward primarily when the uranium market starts to move and starts to get some momentum. We'll come back to the market in the fall and do a drill campaign capital raise, and we want to raise around $3 million at that point, and that'll all be going towards the drill program. We figure we can get about 20 drill holes of about 6,000 meters, which will give us a really good look at those targets we've identified in that conductor.
That sounds good. I appreciate the information on that. Now if things are delayed in the uranium market and things don't move as expected, next month in July, people are expecting 232 to maybe potentially come out. The jury's still out on if that'll actually happen on time. If things are slow for the rest of 2019, do you guys see really delaying your efforts out in the field and more kind of just a conservative type approach, waiting for things to move before you start to move?
We have 2 tracks planned right now. One is if the market stays as is and improves, and the other one is if the market stays, potentially gets worse, which could potentially happen if there's not a great result or no result from 232. We're leaning towards the fact that we believe we're going to see the uranium market start to move in the later half of 2019 and early 2020. So we've gone ahead and we've got all our planning in place, vendors identified, so forth, and all the relationships building to really make this drill program go ahead. And that's sort of the direction we're pushing towards. If we decide to delay the drill program, we will have enough capital in our reserves to last us for at least 24 to 30 months.
Okay. And Jon, how do you look at company G&A structure in terms of compensation, promotion, non-exploration expenditures? How do you see creating value for shareholders?
Well, I'd say you could probably compare our G&A to any other sector, any other companies in our space, and you'd see where we come up quite favorably. We have a very small internal team, most who are on very small salaries, and with back-end compensation for options, so forth. We really are invested in making this company go forward quite nicely. Myself, I take a very small salary of $3,000 a month, which also helps cover off office space. So it's quite reasonable. Our burn rate is probably less than $20,000 a month right now.
How do you see the exit strategy for Standard? Let's say there is something out there at Davidson River and something that creates some good value for shareholders. What's the plans in terms of longer term? Does the company come forward with a strategy of the expectation that it will build to produce and advance enough value there for someone to look at buying the company out? Or is there a desire to maybe take it a little bit further than that and take it on into a potential discovery and then maybe even a development?
So great question, and we do address this quite often. We believe that the southwest corner of the Athabasca Basin where we are, there are going to be mines and a mill built there in the next number of years, whether that's 5 to 10 years down the road, hopefully on the shorter end of that. I know both NextGen and Fission are both talking about being into production by 2025. For us, we are right beside them, so we would be a great feed source should we make a discovery in that space. But we do like the strategy that both NextGen and Fission are going along with right now. They make a discovery and they continue to drill it out and add to the resource and add value to their shareholders until if an offer comes along that you can't refuse and the shareholders want to go that way, that's one way we could go as well.
And how should investors approach the uranium mining sector in general? And what red flags should they look for when considering companies proclaiming to be in the business of uranium?
Well, I think, if I was giving advice to retail investors and they're starting to learn the space, first thing I would do is do some homework, do some diligence, figure out the space. There's a lot of good people out there they can follow on Twitter, or there's reports like your own report they can read and get some basic information. I would then ask them or direct them to really look at a few things. Look at where the projects are, look at the safe jurisdiction, look at what the company has done in the past, not so much the company itself, but also each individual on that management and board. What kind of experience do they have? And what is the exit strategy? If they make a discovery, are they in an area where it could never be brought to production, or are they an area where it could actually be a fantastic result for the company and shareholders? And then I would say, don't put all your eggs in one basket. Look around and see if you can find a number of companies that you like. Some might be companies that are already in production in different parts of the globe. Could be early exploration companies like ourselves. And then also give yourself an opportunity to find a company that has yet to make a discovery. So if they do make a discovery, you can have massive upside for shareholders. Not only that, we like to look at where Fission and where NextGen were a few years ago before they made the discovery, the share prices they were at, and what happened to those share prices when they made the discoveries. And those discoveries were made in bear markets. So we always say to investors, can you imagine if a company like ours makes a discovery in that region and it's happening when the uranium's in a bull market? It could be incredible. So giving yourself lots of potential upside is always huge.
Well, thanks for sharing your ideas on that. Why should investors consider taking a stake in Standard Uranium today? What would you say to potential investors who are looking at this and awaiting the listing?
I would say to them, really, take the time to go through our research, have a look at our 43-101, do some background information checks on the people we have on our team, look at that region we're in, and look at the background of what happened with Fission and NextGen when they made the discoveries. We like to compare ourselves to where they were prior to their discoveries, and having Garrett Ainsworth on our team and the material that we're looking at with geophysics is pretty exciting, because he's seeing a lot of the same stuff that he saw when he was with those two companies. So I tell investors, if you believe that there is an opportunity for a discovery in this region, we're a fantastic option for you to take a look at. And
Jon, how can investors reach out to the company for more information?
The best way is just to go right onto our website. That's www.standarduranium.ca. On there, you can find all our reports. You can find contact details, or you can reach out to me by email or phone. And also on Twitter, you can find me at Standard Uranium.
Well, Jon, I really appreciate you taking the time today, and good luck with Standard Uranium.
Thanks, Andy. I really appreciate you giving us the opportunity to share our story with your audience. And once again, anyone that wants to reach out to me, I'm pretty easy to access on Twitter, and I love talking about our company and where uranium's headed.